distinguished guests, speakers, and participants. Ladies and gentlemen, a very good morning, afternoon, and evening to all of you. On behalf of the organizers, the General Council for Islamic Banks and Financial Institutions, and the S&P Global Ratings, I have the honor and pleasure of welcoming all of you today to this webinar on unlocking the potential of Sukuk, exploring constraints and accelerators for growth in Islamic financial markets. Ladies and gentlemen, unlocking the potential of Sukuk is essential for fostering growth in Islamic financial markets. Sukuk as a Sharia-compliant financial instruments have gained recognition and popularity globally. However, there are still various constraints and accelerators that impact their growth. To fully tap into the potential of Sukuk, it is crucial to explore and address these factors comprehensively by identifying and mitigating constraints such as regulatory challenges, standardization issues, and market awareness. We can create an enabling environment for Sukuk issuance and trading. Moreover, leveraging accelerators such as technological advancements, innovative structuring, sustainability, and investor education can further propel the growth of Sukuk and drive their adoption. Through a concerted effort to explore and navigate these constraints and accelerators, we can unlock the full potential of Sukuk and stimulate the continuous expansion of Islamic financial markets. We come together today in this webinar to examine these various constraints currently impeding the industry's progress, including regulatory and structural issues and the impact of global economic conditions on the Islamic financial sector. The webinar explores growth drivers like sustainability, digitalization, presenting new opportunities in the industry through expert presentations and discussions. Ladies and gentlemen, before we start, we would like to make a couple of announcements. If you have any questions throughout the webinar, please do not hesitate to write them in the Q&A section that appears below, and we will try our best to answer these questions as much as we can. The webinar will be recorded and posted on CIBAFI's social media platforms in the coming days. Please follow us on social media platforms. We will also appreciate your kind feedback on the organization of the webinar by filling out the evaluation form for the webinar. Please note that after leaving the Zoom platform, you will be directed to the evaluation link. Now, without further ado, I have the pleasure to call upon Dr. Abdelilah Belatiq, Secretary General of CIBAFI, to deliver his welcoming remarks. Dr. Belatiq, the cloud is yours.
Thank you, Rashid. Distinguished guests, dear colleagues and friends, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, good evening to all of you wherever you are. It is a great pleasure to be here and to welcome you to CIBAFI events. As we kick off the second day of the CIBAFI annual meetings, which started yesterday with a number of side meetings of sustainability working groups and members consultative group, we are pleased to welcome you today in this webinar on unlocking the Sukuk potential. Before saying a few words, I would like to thank our partners and colleagues from S&P Global for the partnership to make this webinar possible. And would like also to thank our guest speakers and friends. Thank you very much for your support as always. As we see the global uncertainties surrounding us after just 3 years off, we thought we'll be out of the COVID-19 pandemic and having the global economy started to be somewhat better. We are seeing a number of challenges surrounding us, from global geopolitics, wars in Europe and closer to us around here, and what's happening in the financial sector and the economy with the inflation skyrocketing almost everywhere, and the normal reaction by the central banks of increasing the rates, interest or profit rates, with the impact that is having on slowing the economy somewhat and on the banking sector, on the financial markets. And we have seen what's happened in the US a few weeks ago and even in Europe, and probably the situation is still not over. Islamic banks, of course, are not immune from these challenges, in particular because some of their structures and their inability to reprice some of the financing that they provide. So it adds another layer of challenge related to this. But despite these challenges, Islamic banks and Islamic finance has proved to be resilient. From our research and publications and survey that we do, we will be issuing our Global Islamic Bankers Survey, which has been issued for the last 7-8 years. And we see that still Islamic banks outperform in many jurisdictions their counterparts. And still the outlook they are having is very positive, if not better than their counterparts. At least it is in the same range. Similarly, on the risks and concerns, what was considered as very high risks for the last 2 to 3 years, namely all the technological advancements, the cybersecurity and other, and the credit risk and so on, they are becoming still among the top concerns, but in somewhat the severity of these concerns has dropped somewhat. So we can say it's a resilience that is coupled with an optimism, but a prudent optimism. So despite this, there are still, again, many opportunities. So what we see is even in some jurisdictions or regions where Islamic finance is maturing and having some growth, still, there are still, we think, regions that the potential is really very, very high, namely in African countries, for instance, and Central Asia, where still many governments and jurisdictions struggle with the regulatory framework and the Islamic infrastructure, the institutions and framework that is needed in those jurisdictions. So I think still a lot of potential there. When we talk about the Sukuk, of course, Sukuk is the second in line after the Islamic banking, but still, even in there, I think there is still a lot to do, in particular because we see a high concentration in regions, in different countries that issue Sukuk, even though there is a growth, but still there is a concentration, and we will be curious to hear from our friends and colleagues on how this will unfold for the next few years compared to the outlook that we are also having. So with this, I would like again to thank all the participants and the speakers and our partners. We look forward to seeing you for our other events today. We have in two hours the launch of the Global Islamic Bankers Survey, with later on some other events, and our annual general meeting, which, and also very important, is the announcement for the award winner for 2023, which is on ESG and sustainability integration. Looking forward to seeing you and to catching up with everyone. Thank you.
Thank you, Dr. Bilatiq. Ladies and gentlemen, to provide you with an overview of the current state of Islamic finance, its growth, opportunities, and challenges, I will call upon Dr. Mohammed Damak, Global Head of Islamic Finance at S&P Global Ratings, for a concise presentation on the outlook for Islamic finance. Dr. Damak, over to you.
Thank you, Rashid, and thank you, Dr. Abdel Ilah, and very good morning to all of you. And it's an absolute pleasure to be here. And again, thank you for CIBAFI for partnering with us to organize this event. So over the next 15 minutes, I'll take you through our view on the global Islamic finance industry outlook. I'll start with the good news. The good news is that the Islamic finance industry continues to grow. It continued to grow at a double-digit pace. So in 2022, we've seen almost a 10% growth in the core Islamic finance markets. We continue to exclude Iran from our calculation because of the volatility in this market. And we've seen the Islamic finance industry almost reaching $3 trillion in 2022, and we expect that the growth rate will continue in the next couple of years. We think that the growth will continue in all the compartment of the Islamic finance industry, namely the Islamic banking, the Sukuk, the takaful, and the funds. For the Sukuk, I think I have to mention that there was a slowdown in the volume of issuance in 2022, but the new issuance of Sukuk continued to exceed the Sukuk that matured during the year, thereby contributing positively to the overall industry growth. However, we think that the slowdown in the volume of issuance will continue in 2023, driven primarily by the lower and more expensive global liquidity, given the fact that the central banks have been increasing the interest rates in order to tame inflation, and also the increasing regulatory complexity. And we saw it, for example, with the implementation of AOEFI Standard 59 a couple of years ago. And last but not least, the reduced financing needs in some of the core Islamic finance countries that will overall hold back the volume of issuance in 2023 compared with 2022. If you look at this chart, you can see that the decline in the volume of issuance has happened almost everywhere, with the exception of Malaysia and Turkey. Malaysia, it's because primarily of higher growth in the country in a post-pandemic context, and Turkey because the country was pursuing all the financing avenues available in order to raise hard currency financing. In Saudi Arabia, the government continues to develop the local capital market through the issuance under the unlimited government program. And in the UAE, if you look at the volume of issuance, it has stabilized to almost $5 billion, which is almost 50% of what it used to be pre the implementation of Standard 59. If you look at the foreign currency Sukuk issuance, the drop is even more significant there, and that's primarily because of the monetary policy tightening by the central banks in developed markets and also in the core Islamic finance market. And again, the overall contribution of the Sukuk market, the foreign currency Sukuk issuance, remains still limited and point to the fact that Sukuk are still viewed as a less credible avenue to raise financing in hard currencies when compared with the conventional markets. The complexity of Sukuk issuance partly explain this contribution, but we think that things could change in the future. Now, the industry continues to face two main challenges from our perspective. The first one, and what I like about this graph, is that it tells you the whole story of the industry of the Islamic finance. If you look at the assets of the industry in 2012 and compare them a decade later, you can barely see any changes, and that's because the industry is struggling to attract interest from beyond its core jurisdiction, and that's primarily because the industry is still perceived as a more complex avenue to raise financing versus the conventional industry. And this complexity is even aggravated by the fact that, for example, of what we've seen with the adoption of AOEFI Standard 59 and the additional complexity it created for the legal documents and the issuance of Sukuk. For example, we saw a drop in the volume of issuance of Sukuk in the UAE by almost 60% in 2021. Now, some people, I presume that you're all familiar with the changes induced by Standard 59, but in a nutshell, the Standard 59 has made the tangibility requirement a lifetime obligation versus an obligation at the inception of Sukuk only, and also the language related to indemnity was revised, and that has resulted in additional risks for the investors. For example, the exposure to risks related to partial loss event, or the exposure to risks related to the dissolution of the Sukuk because of the hitting the tangibility ratio before its maturity that could cause some issues from a liquidity perspective to the issuers. There are opportunities for the industry for 2023 and 2024. One of them is the issuance of digital Sukuk, and we think that digitalization could resolve two main issues that the industry has been facing so far. Number one, the complexity of the process of issuance, and number two, having standard legal documents in order to be able to tap the market. And the value proposition here is to remove all the intermediaries, reduce the transaction costs, and make the Sukuk issuance as simple as logging to a platform, selecting standard legal documents, plugging in underlying assets and going and hitting the market, instead of the process that many of you are familiar with today, going and discussing with the lawyers, the scholars, the investment bankers, etc., putting the structure together and hitting the market. And digitalization could also help to open the market to smaller issuers that cannot make it today to the Sukuk market, because this would involve a much bigger cost to them, or to the smaller investors that could not make it to the Sukuk market, because today you need to have a minimum of sometimes $100,000 or more in order to be able to take position in the Sukuk market. Now, obviously, the opponent to the digitalization of the Sukuk market argue that by going digital, corporates might need to relinquish the relationship they have established with the banks and their capacity to distribute the bonds or the Sukuk, etc., But we're of the view that, the two processes are not mutually exclusive, especially that some of the large banks are the ones promoting these platform of issuance and are the ones that are trying to disrupt themselves before being disrupted by external players. Also, some of the proponents to digitalization argue that it has a lack of track record, but obviously you have to start somewhere. But we think that one of the main weaknesses that the digitalization of the Sukuk market faces today is the absence of a central bank digital currency, or something that could go natively on the blockchain in order to unlock all these opportunities. The second opportunity is related to sustainability. And again, I think many of the core Islamic finance countries are developing or implementing their strategy to transition to greener economy, and that is creating a lot of opportunities for the Islamic sustainable financing, both for the intermediated or the banks financing, or the disintermediated or the Sukuk. And if you look at the numbers here, since the beginning of the year, for example, we've seen almost 50% of the volume that was issued last year being printed in the market. And we think that this will continue, especially that some of the large players in the core Islamic finance markets have announced their intention or their strategy when it comes to sustainability. And some of them have even committed to numerical objective in terms of facilitating a certain level of sustainable financing. And we think that a portion of this level would come in the Islamic finance market, either in a disintermediated or in an intermediated manner. So in a nutshell, the outlook is positive. We think that the industry will continue to grow by almost 10% in the next 12 to 24 months. We think that the concentration in all exporting countries, complexity of transaction is preventing the industry from expanding significantly beyond its original territories. But we think that there are some opportunities still for the industry to continue to grow, which are in the digitalization, particularly for Sukuk, and also in sustainable finance. With that, thank you very much for your attention, and back to you, Rashid.
Thank you so much, Dr. Muhammad, and for your insightful presentation and also the snapshots that you gave us on the outlook of Islamic finance. So, ladies and gentlemen, we will start the panel discussion of this webinar. And for this, I will get back again to Dr. Muhammad Damak to moderate the panel and welcome the panelists. Dr. Damak, over to you.
Excellent. Thank you very much again, Rashid. I have the pleasure to have with me Mr. Ijlal Alvi, the CEO of the International Islamic Financial Market. And I have also the pleasure to have with me a couple of my colleagues, Timoshin Engin, who is the cross-sector and country coordinator in the GCC based in Dubai, and also Rawan Awaidat, who is the lead analyst for corporates in the GCC. And without further ado, I think I'll start with you, Ijlal. I think international Islamic financial market is an important player in the Islamic finance industry. And over the past few years, you guys have been on several fronts, from producing standard legal document to coming up with language for the IBOR transition to sustainability. Can you tell us where do you stand and how do you see the industry going forward?
First, thank you to CIBAFI for inviting me, and thank you for the introduction, Dr. Damak, and it's indeed a pleasure to be participating. And what you have basically mentioned in your speech, or how you see the industry, naturally there are certain things which are positive, of course, as we go along, and we have seen in certain jurisdiction continuing expansion. In certain jurisdiction, we have mentioned which there is some impact, and also how the structural issues sometimes we need to see. And from IFM point of view, we sort of see it, or from our scholars also and Sharia board, which we have common, some of them from AOFI also, is that there is sort of certain things which need to be sort of explained, maybe a bit more, have to be looked at it, how certain standard apply. And we also have to see how, ijtihad, which is very important, how that is, taking place. So these are all things which are, we see, progressing. As far as IFM is concerned, of course, you mentioned, I will first sort of just mention about the documentation side, and particularly since we are talking about Sukuk, to mention that we have issued two Sukuk standards documentation. One is Ijara, and one is Tier 1. And Sukuk documentation, it's a very complex exercise, as you will know. And it took us a long time to actually publish. I wish we could have done earlier, but it's been now 2 years nearly. And these documents, naturally, when you do Sukuk documentation, you will know that certain things you cannot really standardize. Certain standards, you can just sort of take it and you can, pretty much use it in the industry. We have seen what we have produced. And unification is very important, which helps, not only cost reduction, also time efficiency, also Sharia is a paramount. Harmonization, the legal aspects are very important if you see how the legal will work, because you cannot really detach yourself, especially for the cross-border market, where it is very important. Domestically, naturally, it is useful, but then you can have certain things domestically which you can sort of put together, as we have seen. And so, what we have seen in our documentation, and as we do the surveys and all, and we try to check, because Sukuk, naturally, when you do a documentation, naturally, and what you raised about the digitization Sukuk, it's a very interesting area. I would like to work with you and others on this area to see, and given our mandate, which is very clear as compared to what AOFI does and what in particular FSB do, but we are concentrated on this documentation side, product side. So we can see, and Sukuk, naturally, when you are doing a documentation, certain things you cannot standardize. For example, your assets type and things related to that. How will you will do that? That's very important. And another thing which comes to my mind is that, looking at the issue of asset-based Sukuk versus asset-backed. And these are, to my sort of humble opinion, and what, experience I have gone through in this area. 20 years ago, I was part of the conventional side and investments, and I have seen how, the market has developed, is that you have, asset-backed, which is totally a different sort of a type of segment. And I'm sure in your rating also, you do it differently. Maybe you can expand on that. And it is different investor class you need, and it is different usage. Well, what you have at the Sukuk, of course, underlying assets are there. Of course, you have tangibility ratios, which are, part of 59 also, which you need to sort of see how they will work. Certain country could be tangibility could be 33. Certain country could be 51. What we have seen and what our sort of document, we have sort of covered that bit. But naturally, we don't really, our Sharia board looks into certain things like total loss clauses. If you see in our Ijara Sukuk documentation, we don't have time to go into those, but you can see what our Sharia board additionally put into there. Sometime in Ijara Sukuk, maybe what our Sharia board said that you cannot include the financial assets, for example. But it's up to the market, really. It's generally voluntary. I wish, standards could be, in some cases it is the case, but it is generally voluntary. as a standard setting, I would like to see, to be imposed. But that's how the market is. You have to give that flexibility, and it's totally understandable. We sort of put that there, and then this onus lies with the users also. When we do it, we cannot really take that role, and this regulators, some of them do work with us, but generally it is with the institutions and all we have seen. So this is, and in terms of when you talk about the transition and the key issues, IFM, alhamdulillah, is always tries its best with its member banks and other institutions and its founding members, which are some regulators, especially Central Bank Bahrain and others, is issues which are going to be basically impact the industry in some ways. And if you see, you can refer, if somebody has not referred to our paper, what we have done on the IBOR transition mark rate, you can see we have put down a lot of things there. Of course, based on contribution or consultation. And we did that exercise, and we took the lead, and we managed to work, quite fast pace on that, given the deadlines. And we have seen now transition is taking place. And what we have sort of put together, in terms of Murabaha, are two solutions for transition. And that solution, depending upon really how the regulatory environment is and how the institutions, their own internal, they can be used for 59. We can have solutions that can. It's not really sort of alley and just trying to bypass. It's not the case. You have to see practically, and you can apply, giving Sharia guidance on that. And that is something which we have for Murabaha in particular, to do that. And that's how the whole thing is that we need to expand the industry in a robust manner, of course, on the Sharia principle. And there are some red lines which you don't need to cross, and we cannot cross. We know that. We cannot guarantee, for example, Mudarba, Sukuk, previously it used to be there. It's no longer. You can put down certain conditions. If I may say, it's not really sort of relevant in the Sukuk sense, but we have unrestricted wakala, where of course there is no guarantee, and that standard is quite widely used. Even some central banks have used it. Bank of England referred to it, Central Bank Bahrain uses it, and institutions. And you can see, you can put down certain sort of liabilities on, let's say, agent. In case of unrestricted, I'm talking about. And there's a whole discussion, but I'm saying that you can find sort of solutions which are workable. It's not really something you are trying to bypass. So we have done that for Murabaha. We have done for Ijara financing. So there are two solutions each. Some solution are, let's say, more sort of in use in Far East, and our Sharia board was, looked at that. And some can be for GCC. It depends what you choose. And then in terms of other area which we have, I think probably it's right to say that we pioneered that area is the hedging. And that's the sector we developed, and in terms of documentation, what we have done in terms of risk mitigation documentation, product side documentation. And we have basically looked at how IBOR impact, because there are a lot of transactions which are done on IBOR basis, and naturally they have to be moved. And at master level, we didn't have that. ISDA may have, but we have a totally different joint documentation for Islamic, which in some countries it's, for Saudi Arabia, for example, or even Bahrain, it's regulator require them to use that for the Islamic. Conventional, they can use the ISDA one. And there we clearly sort of looked at it, how that impacts, and we have provided some guidance on that. We didn't have to do the solutions, how the market structures the transactions, but that's we have seen. And then also there is a reference book one can see. So I don't want to take too much time, but there is, I think what I have seen in terms of the, my last point would be looking at, the benchmark rates and how sort of impacted and how it has, now seen the use of, especially, moving from fixed rate to floating rate and your profit rate swap. That I think I've seen, that use of that standard greatly in last 1 year or so, because previously people were not aware, or maybe they were not really sort of thinking that rate will rise so rapidly when you had near zero and now nearing 5%. It's a huge jump if you can see how that is impacted. You have seen how, certain 3 banks in US being sort of not only impacted, but they are literally, have to be sort of closed down in some way or taken over. So we have seen that, and we have seen, what we've always been saying in terms of the hedging, that's the critical element for Islamic. You cannot really detach yourself, as standalone. We are part of the same market. Of course, we developed, on certain different bases. We have certain different rulings, so you can differentiate. But in the end, you are sort of part of the, global financing network. And you cannot really, in my humble opinion, detach yourself. Rather, you sort of build in, certain things, and you are in the industry to develop it and move forward. So that is something which I think I would like to sort of briefly mention. Unless you have some more, I think I should stop now. And you can inshallah lead the session and we can have more discussions. 2 of your colleagues, it's really good to see them. I've not met, but inshallah we can meet also. Thank you.
Excellent. Thank you very much. Yeah, I think risk management is really paramount for the future sustainability of the industry. And I agree with you that the asset-backed Sukuk could be one of the accelerator of the Sukuk market. We saw it in Saudi Arabia, for example, with the fantastic growth in terms of mortgage lending over the past few years. That has led to some liquidity pressure. And one of the potential solutions to this liquidity pressure is to tap the capital market and to use some of the asset-backed structures in order to alleviate the pressure on the balance sheet of the financial institution. The other potential accelerator for the industry is sustainability. And now I'd like to turn to Rawan. And Rawan, what are the expectations for global and regional growth opportunities for sustainable finance?
Yeah, thanks, Mohammed, and good morning, everyone. So basically, I would say on a global level, we believe that this year, a global green, social, sustainable, and sustainable-linked bond issuance will return to growth, reaching somewhere between $900 billion and $1 trillion this year, and almost nearing the record $1.06 trillion, which was recorded back in 2021. So clearly, this follows a 2022 in which contractionary monetary policy and macroeconomic uncertainty has pulled down global bond issuance in total. Basically, in terms of geographical breakdown, we expect the majority of the issuances to be coming from Europe and Asia Pacific, and that green bonds will likely to continue to dominate, basically with about 55% market share of these issuances. And maybe here, just to remind, these are instruments that raise funds for projects with environmental benefits, and these could include renewable energy, green buildings, and sustainable agriculture. That being said, we continue to expect sustainability bonds to become more prevalent, and these are instruments that raise funds for projects with both environmental and social benefits. And while we expect global bond issuance in total to be somewhat moderate this year, probably in line with your Sukuk outlook, we expect the sustainability issuance, including the green, social, sustainable, and sustainability-linked bond issuance market share to reach somewhere between 14 to 16% this year, compared with just about 4% back in 2018. And maybe to zoom in on the region, we've already seen some traction in the sector, albeit we do expect to see more room for growth in this area. So in the UAE, for example, we've seen Masdar establishing its green finance framework. We've seen TAQA issuing green bonds. In Saudi, the PIF secured $5.5 billion as part of its second green bond this year. And maybe just for a even bigger picture, we've published about 12 second-party opinions since 2021, and also known as SPOs, and about 5 basically in the Middle East and Africa region, and 5 of these have been published this year. So it just shows that there's more traction, but clearly there's more room to grow in this space.
Thanks, Rawan. $1 trillion, that's not bad. Maybe I'll stay with you, but on the same topic, but from a different angle. What's in it for the issuers and the investors, and what are the key drivers for them to participate in the green and the sustainable capital markets?
Yeah, that's a good question. I mean, clearly the net zero pledges are spurring sustainable finance issuance, and not to mention that banks, which also have a net zero agenda, want to further green their portfolios. So maybe in summary, I think there are three main factors that could either drive the growth or drag it down. And maybe to summarize, these could be the policy initiatives, the levels of investment in climate adaptation and resilience, and the ability of issuers to address some concerns about the credibility of certain types of issuances. And maybe just to give a bit more color, we think that policy, regulation, and transparency initiatives could influence investor demand and issuer appetite, whereas the calls for investment in climate adaptation and resilience could spur more issuances, namely green and sustainability bonds, to help bridge the gap between the cost of adapting to climate change and what has been invested to date, which is still relatively low on a global level. And lastly, we think that sustainability-linked bonds are at an inflection point, meaning if questions surrounding the credibility of these bonds are not addressed to the satisfaction of investors and other critics, we think that this could hamper issuance in what has been a major growth driver for the segment. And just to give a bit of numbers, in 2022 alone, sustainability-linked bonds issuances have declined 25% compared with 2021 levels. So I think this is it in summary. And I think broadly speaking, the regional drivers are relatively the same as well.
Right, thanks, Rowan. A lot of opportunities clearly, but a need for transparency. And here I'd like to switch gears a little bit and see what's happening in the corporate space. And turning to you, Timoshin, can you shed some light on what corporates are doing in terms of building internal capacity, monitoring exposure, beefing up their disclosure, which would be extremely important for the future growth of the industry going forward?
Definitely, Mohammed. Thanks a lot for this. Rawan covered very well the transactional aspect of it. I think the other aspect is obviously the disclosures and the changing attitudes of the corporates. I guess you can argue sustainability is a relatively new concept for our region. When we look at the operating entities here in our region, they all know their businesses very well. They know how to produce, how to manage their cost base, to distribute to their clients. But when you incorporate sustainability into the equation, you begin to have this whole new set of questions. Yes, you are producing that item, but what type of emissions are you generating? Maybe as a follow-up to that, how do your emissions compare relative to your peers in the region? And even maybe more importantly, because this is a question of financial materiality, if you need to reduce your emissions 2-3 years down the road, what type of projects are you going to engage in? What type of financial implications will there be for you? So all of these questions, as you alluded to, kind of needs you to have a new level of understanding, a new knowledge base, and companies have been, working on this front, hiring sustainability professionals, building internal teams, processes. So they begin to identify those exposures, manage them proactively, and also communicate to their investors. But we also need to recognize sustainability is not just the mandate of a single department in the organization, especially in sectors where there are high level of emissions, sectors where some of the companies will engage in significant amount of capital expenditures over the next 10 years. Many companies place these sustainability topics or targets at the center of their long-term strategy. So in addition to establishing, acquiring this capacity, they also strengthen the understanding at all the organizational levels and create alignments, across different divisions. Because if you have a major project, it's not just going to be the financing it, treasury will be involved, business development will potentially be involved. It's a really holistic approach. So if you look at Europe, companies have been doing this for the past 10, 15 years. But when you look at our region, it's relatively new. But on the back of all the initiatives that Raman mentioned, the regulatory push, we can talk about ADGM guidelines, the ESCA regulations. Over the past 2 years, we have seen a lot of activity on the ground, as you alluded to, a lot of sustainability hiring, which is sometimes a bit of a challenge, building internal teams, and people started publishing their exposures, their reports. And going forward, in addition, when we listen into the earnings calls, investors calls, management teams talk more and more about sustainability topics or targets. So going forward too, as Rawan alluded to, our companies are looking more and more at capital markets. They are engaging with investors more frequently, and investors have these questions about getting forward-looking guidance, getting more quality reporting from the issuers. And I think we will see a lot of developments in that space over the next few years.
Excellent. Thank you, Timotion. Maybe I'll stay with you. And from your discussion with the different corporate in the region, what are the key challenges they've been facing in building up this capacity?
I think one challenge for everyone potentially is the hiring side of it, because this has been, we started the game relatively late, but the growth has been phenomenal. The regulatory development, the push from the authorities, we can talk about the net zero targets for the governments, but for some of the key entities too. So hiring is a challenge because sustainability is a recent theme. So we have been seeing a lot of activity on that ground. But I guess one opportunity for the corporates is they have some best practices which they can look up to in other markets such as Europe, which I think has been helping them.
Excellent. Thank you, Timotion. And that's interesting because these are the same, more or less, topics that we hear from the banks as well. And by the way, we've seen also the Islamic banks and the conventional banks in the region increasing their communication on sustainability-related issues, and for some of them even committing to a certain level of sustainable financing. Now, we obviously live in a region where hydrocarbons are important and will continue to be important, and energy transition will inevitably have an impact. But before turning to you, Rawan, for the next question, I'd like to remind the audience that you have the Q&A box. Please don't hesitate to submit your questions. We'll try to allocate them to the different speakers. Now, from a rating perspective, what's the impact of the energy transition on the corporates in the region, and mainly the oil sector?
Yeah, thanks, Mohammed. So, I mean, honestly, we've seen the GCC national oil companies aligning their strategies with their respective national sustainability targets, with the net zero commitments, with which Timotion has alluded to. But in general, we believe that the energy transition, will be challenging for these peers and will take more time compared with the international players. And this is largely because of the high reliance of the regional economies on the sector, with hydrocarbons contributing somewhere between 70 to 80% of central government revenues on average. But also because we expect to see less direct pressure from key stakeholders, whether it's the shareholders, the regulators, or the policymakers. Maybe just to summarize, even though the GCC national oil companies are equally as exposed to the energy transition, we think they have the sufficient financial buffers to help withstand additional incremental investments needed to adapt to the transition, while still preserving their credit metrics at least over the next 3 to 5 years. And basically, to gauge the impact on credit metrics, we devised a hypothetical and purposefully stressed exaggerated scenario, where we looked at low carbon investment spending to the international peers, and these included projects such as renewables, but also projects such as carbon capture, utilization, storage, for example, and gauged what that meant in terms of overall total spending. We also looked at greenhouse gas emission targets and what that meant in terms of required spending for the international peers, and extrapolated this on the regional national oil companies. And based on this scenario, we estimate that the regional national oil companies in aggregate need to spend somewhere between $60 to $65 billion between now and 2025. And this figure increases to about $130 billion between now until 2030. But this would still mean that on average, that the to EBITDA levels would remain below 1 times. So maybe here, just to maybe reiterate the fact that this is a purposefully exaggerated scenario, meaning that we don't really expect this capex to even fully materialize for several reasons, but including discrepancies with the business mix. So clearly, companies with higher refining exposures would need to spend more to reduce the emissions. Secondly, the intensity levels, the greenhouse gas intensity levels in the regions are structurally lower than that of the international peers, meaning that they would need to spend less to reduce their emissions. And lastly, the overall underlying environment, I think in the short term at least, has shifted the question from the question of energy transition to the question of energy supply.
Excellent. Thank you very much, Rowan. And I think for banks, the impact is also expected to be limited, at least in the foreseeable future. I think we published a study recently showing the exposure to sectors subject to energy transition, which we estimated at around 12%, and has been stable over the last 3 years, and dominated primarily with exposure to the government and some of the government-related entities that, as you explained, will be relatively resilient. Now, with that, I can see a few questions coming in the chat box. So I suggest that we move to the Q&A session. And I will start by combining two questions and throw them to you, Ijlal. So the question says, how come that standards limit the development of Islamic finance while they should boost it? And the second question is, are there any gaps in the current regulatory environment that needs to be addressed in the Sukuk market, and how can regulators balance innovation with investor protection in the Sukuk market? Over to you, Ijlal.
Thank you for that. Listening to your colleagues, a very, enlightening discussion, and I think I will just go for the first one first, and then go to the other one very briefly. But that's a huge question. Both of them are important. You have to understand, what sort of generally what you see. Not generally, I think what we have seen as from the conventional market, just from the point of view of looking at the role of standards, they increase the market development. They don't really reduce it, especially true for documentation side. It's very much, is there. When we look at documentation, of course, Sharia is paramount. We look at AOP, then we have our own sort of certain thing from market side we have to see. And, our Sharia board provides that. Then you have to see the legal side of it, which is important. How it impacts, how it can be handled. Let's say netting law, it's been implemented in UAE. You have other GCC countries looking at it. It's international law, which is very helpful. And then, so what you see, and also market practice, for bringing common practice and operational issues, and also there's a huge task. That's why it takes a while for us to develop, but alhamdulillah we do. So you have to see standard from, not in general terms, bring everything in one basket. You see the certain standards, if let's say Sharia standards, they're very helpful. I'm not really sort of, going to say anything, they really help the industry. But you have to see in certain cases, how the interpretation is done, because those are general. When you go, so especially for what we do, I'm not overemphasizing our sort of own what we do, but it's generally the case. What I've seen is that you have to see that those general and how sort of the interpretation is done, how widely acceptable they are, how sort of in a way. When you're developing standard, you don't really develop, at least from our point of view, we could have done, we have 16 currently, but we could have done maybe 40, 50. But we go from the point of view, starting constellation, and see what is really needed for the industry to develop. Let's say now we are looking at syndication side. Okay, so we will, inshallah, soon start a syndication documentation for Ijara and Muraba, most likely. And that's, it helps the development. It helps sort of, you have seen the role of, in the conventional space, how they have been referred, how regulators also support. So you have to see, from what angle you are looking at, standards. They don't really sort of, they make the market better. They make the industry better. They help basically in cases I mentioned to develop. Of course, there could be some which naturally adjustment need to be made, depending upon, the user, the regulator. That's, is the exercise, which sometimes, we see some. But overall, my sort of experience, humble opinion, what I've seen, and if you read generally, the role of standards, they help the market to develop. Because without standards, you go, in different directions. You sort of, everybody can have, let's say, I had a visitor from Bangladesh yesterday, and we were talking about how sort of they are developing, what kind of standard they're basically, it is not really there yet in certain jurisdictions. So I think it's not fair to say that all standards, are basically impediment goals. It's not the case. It's just, in some cases you have to make certain gesture, and it's the normal phase. If you see, the industry developing, is how we are progressing. Definitely, certain things will come as we go along. As we develop, we have to find sort of new sort of things, and certain things are based on Zarura. You see, and certain things, in my view, or certain arrangement, or certain documentation, are basically could be over reliance. So we have to see how that over reliance can be reduced, and for that you need the whole industry to work together. You need the regulators, you need the institutions, the users, and all others. So that's my very sort of short brief on that. So I think you can put down more on that issue.
Yeah, no, absolutely. Yeah, absolutely. Thank you for that, Ijlal. And I think that's definitely helpful. And I think what could even help the industry more is to be able to reach a situation where the process of issuance of a bond would be equivalent to the process of issuance of a sukuk from a time, effort, and cost perspective. Because I can think of many issuers that have looked at the sukuk market eagerly over the past few years, and then decided to walk away simply because they saw that it was much more complex to put a sukuk together. And I think digitalization, and I'm answering one of the questions that was received from the audience now, I think digitalization could help that. Digitalization could help make the process smoother, in a sense that in order to be able to digitalize, you need to have standard legal documents in place. And that would help to simplify the process of issuance to a large extent, in a sense that put your shoes in the CFO of put yourself in the shoes of a CFO of a large company. Instead of going through the normal process of discussing with the lawyers, scholars, etc., you just log into a platform, select your legal documents, tap the market. Investors would be already on the platform. They would know that you are raising the sukuk. And if they're happy with the risk, they would be able to participate. And I think one of the questions from the audience was, how can digital platform enhance accessibility of sukuk to a wider range of investors? I think the answer to that is fractionalization. Because today, in order to be able to invest in sukuk, you have a minimum entry ticket, which is usually in the hundreds of thousands of dollars, which means that sukuk remains accessible only to qualified investors. Now, what we have observed in the conventional space is that some companies are creating a fractionalized sort of bonds or fractionalized product of a bond and selling them to the investors in a much smaller denomination, like, for example, $1,000 or less. And that helped these investors that were already excluded from the market to gain access to this market and to be able to raise to be able to participate and to invest in some of these products. Now, another question that was raised in the audience is, and I think this question is probably to you, Timoshin, what steps are being taken to ensure that sukuk issuers meet ESG standards, and how can investor assess the ESG performance of sukuk issuers?
I think, yeah, I mean, one side of the equation is how investors look at it. The other side is the regulatory side. I mean, you have seen the developments on the regulatory side. If you look at, I guess, all the GCC countries, all the countries in the region, there are working groups that has been established, which goes back to the past few years. A lot of experts, I think, have been discussing disclosure requirements, other requirements that potential listed companies have to work on. On the other side is the investor demand. I would probably not focus too much on the sukuk side, but in terms of the investors' expectations or evolving expectations is probably a better word, is really to understand the forward-looking picture on the companies. Let's give an exaggerated picture. Let's say, hypothetically, I'm a portfolio manager. I'm establishing a long-term portfolio of assets in emerging markets with a view to invest over the next 10 years. So if I'm looking at certain sectors that are high emission, like, I don't know, building materials, could be aviation, some of the commodity chemicals, I would really like to understand, it's not just the current picture that's important to me. I want to understand the potential financial materiality over the next 5 years. Maybe they are not exposed to any carbon pricing or carbon taxation over the next 2 years, but 5 years down the road, the picture could be very different. They might need to incur a lot of capex or EBITDA declines. So I think what we'll see from the corporates as a response to that is more and more forward-looking guidance. So sustainability is not a point-in-time concept. It's really a roadmap you want to communicate to your investors.
Excellent. Thank you, Timoshen. And I think we have space only for another question. And I'll throw this question to you, Rawan. In the region, what could be the main accelerator of the focus on sustainability-related issuances?
I mean, very briefly, I would say in terms of drivers, one is the issuers' commitments to reduce greenhouse gas emissions, net zero commitments. In the region, we've seen, for example, Etihad Airways, $600 million transition Sukuk in 2020. MAF has also issued a green Sukuk back in 2019. So this is the commitment for the issuers. Secondly, as I mentioned previously, I think it's the drive for banks to green their portfolio. And lastly, I would say the investor mandates, which is slowly but surely shifting towards sustainability, as Timothy has alluded to. And on the regulatory front, it's slower, but we do expect to see similar trends in the region. And maybe more specifically for the region, we're seeing a lot of focus on SPOs in green projects. So for example, Aqua already published a second party opinion, NEOM also for their green facilities. And maybe one last thing, maybe to tie it all in, is whether it's a Sukuk green issuance or whether it's a conventional green issuance, I think it could also be adding a further depth to the investor base.
Excellent. Thank you very much, Rowan. And I think we'll end up on this positive note. I think issuance are happening both on the Islamic and the conventional space, and our issuers are trying to adapt and trying to remain on the global investors' agenda, especially given the fact that some of those investors have clearly made it clear that they would only look at sustainability-related instrument going forward. With that, thank you very much, and I hand over back to you, Rashid.
Thank you so much, Dr. Mohammed, for your amazing moderation of this insightful and informative panel. Ladies and gentlemen, we have now come to the end of our webinar. We would like to thank all the speakers that have joined us today for their valuable insights shared and the fruitful discussion that covered various aspects of this topic. We'd like to thank the audience for their attention and also active participation. So please visit CIBAFI website and follow us on our social media platforms to be updated on the CIBAFI events and initiatives. We thank you again, and we look forward to seeing you in our future events. Please join us in the launch of CIBAFI Global Islamic Bankers Survey, report on talent management dynamics, current practices, challenges, and prospects, which will be starting in about 30 minutes at 11:30 Bahrain time.
Thank you. Thank you, everyone.
Thank you.